Hey, we are holding a $100 bill here for a good reason, because Stewart Welch says you can start investing with just this and really do yourself a favor. Good morning. Good to see you.
Good morning.
All right. So why do we have this $100 bill? It is his. I'm going to give it back.
Oh,
I don't have a $100 bill. What are we doing with that?
Well, I'd say you think of somebody that you know is rich, and here's how that's self-made. Here's what happened. One day they had a $100 bill, and they decided instead of spending it, they were going to save and invest it.
Okay.
And that's the start of all self-made millionaires. And so what I find is a lot of people they either say, I don't have enough money to invest, or I don't know where to invest. And so this morning we're going to dispel that. We're going to take away that excuse.
All right. Say you've saved that 100, and so somebody watching right now, what can we do?
Let's say $1. So we have
okay, we don't have 100.
We have two approaches.
Okay.
One I call the Obama plan, and this is a plan that was put in place and promoted by President Obama, and it's called the MyRA. It stands for My Retirement Account.
Okay.
It's kind of like a Roth, except what I really like about it is it has a really low minimum. Like you can open it with $1, and you can add $1 a month.
Okay.
So there is no excuse not to get started.
But it's earning money for you, even at putting $1 a month.
It's earning money. It's invested in government securities, so there's no risk of loss. A lot of people worried about stock markets. You don't have that. There are some limitations. So the most you can put in a given year is $5,500, same as the Roth rules. If you're 50, you can add another 1,000, so that gets you to $6,500. And Janice, once you get to 15,000, they force you to take it out of the MyRA and put it over into a Roth, which I really like, because now you have a lot of different investment options.
Okay.
But $1 to start.
Anybody can do that, right?
Anybody, and what's really critical to creating success, financial success, is the habit, and so I like the habit. The second one is what I call Stewart's plan. And this is through Schwab. So Schwab, you go to schwab.com, and it's under their one source funds. And this is very recent. They lowered their minimums to open into mutual funds for hundreds of mutual funds to $100. That's our $100 deal right here. And $100 to open and $1 a month going forward.
Wow.
There are hundreds of choices, but I want to take away the excuses. I want to give two options.
Okay.
One is their S&P 500 index fund, which is investing in stocks. And the reason I want to do that is because you're going to have a higher rate of return. The MyRA is paying about 1.8%. The stocks over the last 10 years, over the last 5 years, has earned about 10% a year.
Wow.
So you get a much higher potential return, but it's stock market, so up and down. And a little more conservative option is the dividend equity fund. I know we're going to post this on your website so they can get to the details.
But if you go to that website, it will kind of walk you through it.
It will walk you through it. You'll have, if you look, first of all, go to your website, because you'll get the symbol, and then you can go straight in and start investing in these funds. But they're stock market funds. The dividend one has earned about 8% over the last 5 years, 8% per year average.
So what are you looking at? I mean, especially if you have a child and you want to teach them about investing, what a great tool that is, right?
It is a great tool. It's all about the habit. Somebody asked me, well, Stewart, how much should I start with? And my wife, Kathy, likes to say, bloom where you are planted. And what that means here is start wherever you can start, and then try to increase it every year. And then if you get a raise, take half of the raise and commit it to your retirement account, half of it to your lifestyle.
Okay.
If you get a bonus, do the same thing. And the main thing is get started. And next week, we're going to talk about what's your number, how much money you need to accumulate to have a robust retirement. Because
if you start, it's kind of like, you know, anything you do, if you start and you see success, you want to do it more.
It fuels success. I'll tell you, it's very surprising. Once you get started, you see a little money starting to accumulate, you go, wow, that feels pretty good. I wonder if I can get a little more in there. And success fuels success, and that literally is how self-made millionaires get started.
What a great idea. I have a 16-year-old, and we're going to check out that
Let's
website
do that
and get him started. All right, let's do it. Good to see you.